Good morning from wherever you're watching us from, and welcome to Money Wise Live. I hope you're grabbing a cup of tea like me, because if you're not, you need to sit back and as well take a notebook and sit down to learn. I'm stepping in for Rena Hicks, who is not here today, and I hope that you are ready to learn courtesy of the call that we made through the posters, because today it's more like a class. And this is what we're about to do today. We're going to learn all about investing in bonds. All about investing in bonds. Whatever questions you've ever had about bonds, how to start, everything else, we're going to answer that. Why? Because today, our guest today is Alex Washira, who is the head of fixed income at FIDA Investment Bank. And this man, if I was to describe him in one word, he's bonded. Because he's going to help us really demystify all these things about bonds today. And so if you have any questions that you would want to ask, this is your time. Anything that you've ever done, maybe you're ever trying to invest and you're wondering how to do that, this is your time. But first, we're going to open that conversation so that you may understand what this is all about. And remember, good things are worth sharing. So if you ask me, if you're on Facebook especially, click on that share button so that others as well can get to learn from that. Bwana Alex, welcome, and karibu sana at Moneywise.
Thank you very much, Maina.
Yes.
For hosting me here.
Absolutely.
And giving me an opportunity to share what I know about bonds.
Yeah.
And I hope what we'll discuss,
yes,
will help you make a wise decision.
Yeah.
And they say that we learn every day.
Absolutely.
So this is a chance for you to learn.
Yeah.
So that this thing called bonds,
yeah,
can be demystified.
Okay.
And it's high time that my fellow Kenyans,
yeah,
Africans, let me say fellow African Kenyans,
yes, can get to understand
can
this.
Finally,
yes,
get a chance to now first start investing in bonds.
Absolutely.
Yes.
You know, let me start on a lighter note, because when I shared this poster to some few friends,
yeah,
one of them asked me,
yes,
are you talking about the bonds that people get when they are jailed? You know, because sometimes when you want to do
yes,
that, which is an opening question for you.
Yeah.
What are bonds now, of course, in terms of the money markets? What are bonds?
Number one, let me start with fixed income dealing.
Yeah.
And fixed income dealing is derived from the fact that when you come to me, we discuss how we are going to make money for you. Once you invest in a bond, it will give you a fixed return.
Yeah.
For example, 10, 15, 12, 8% over a certain period of time.
Yeah.
That is why we call it fixed income dealing. However, when we are trading, then the fixed income dealing changes.
Okay.
Because you can make money, so that your income again changes. So your return can change depending on the environment.
Okay.
Moving straight to your question.
Yes.
A bond is an agreement between the lender, who is called the borrower, who is called the issuer, and the lender. We have two types of bonds. We have government bonds. Those are issued by the various governments. Yeah. Government of Kenya, government of Rwanda, United States. Every government borrows through a bond. And at that point, the government becomes the issuer. Yeah. Then now you, the lender, the one who has given money to government, you become the lender. Then you agree that you're going to lend government of Kenya, for example, 100,000 shillings for 5 years, and you're going to get a return of 10% per annum. Okay. Payable twice a year. Meaning every 6 months, you get 5%. Okay. Every 6 months, another 5%. Okay. After the 5 years, then, for example, say we issue a bond, we are in October. So October 2025, government of Kenya will pay you the X amount of money that you invested, that is 100,000, plus the 50,000 that is interest due on that. Yeah. Because 10% per annum for 100,000 is 5,000.
Yeah, that's true.
No, 10% is 10,000.
Yes.
However, this 10,000 is being paid twice annually.
So after every 6 months, you get your 5K.
So 6 months, you get your 5K. So if we are in October, your first 5K will come in May. 2021.
Okay.
The next one will come in October 2021. May 2022.
Okay.
October 2022.
Okay.
May 2023. October 2023. May 2024.
2024.
October 2024.
Yeah.
2025 May and October 100,000 back plus the 5,000. Wow. So October 2025 you'll get your principal plus the interest due on that point. And that is the point when we say your bond has matured.
Okay. Wow. I think that's, if I may use the word, lucrative, because you've just put in your fixed income, you've given them sort of like a loan, and over those years you keep earning your interest that is yearly.
Yes.
And at the end of it all, you still get the money that you invested back, full, of course, having enjoyed all that. Is it?
Yeah.
Wow. That's quite a very.
And let me add something. That. Depending whether government changes hands, that does not affect your return.
Okay.
So it doesn't matter who will come in after the elections.
Yeah, because everybody will be worried.
Yes.
Yeah.
For example, now we are dealing with there are some bonds that were long term that were issued in the Kibaki regime.
Yeah.
They were 25 years.
Okay.
Government is still paying.
Wow.
We are issuing another 25 years, 30-year bonds, 20-year bonds.
Yeah.
And whether whichever government comes in, it's a safe investment.
Great.
That you can enjoy, your children can also enjoy.
You know, one of the key questions that probably somebody may end up asking, which I was asking myself because, well, I tried and I did my first investment in bonds, is what about these things we hear? Government is stealing money, doing whatever. Is my money at risk as well? I don't know whether you have a comment on that before.
No, your money is not at risk. Okay. Remember that government can borrow to pay you because the time for maturity has come in.
Yes.
When it is interest rate payment, government can again borrow or tax.
Yes.
Because it has an obligation. And one of the first obligations that government must do, other than paying salaries for the employees, it must honor its bonds and foreign debts.
Okay.
So this is an obligation that government has to take care of.
And we have not had any history of them not paying, is it?
Yes, and that is why even when you look at the World Bank rating, we are still being creditworthy to World Bank.
Okay.
We have a Class B rating. Let me add, because I mentioned that there are two types of bonds. Yeah. There is also corporate bonds. Yeah. However, for the last about 4 years, we have not had a corporate bond, and this is due to the fact that the market lost some confidence a little bit because there was a bond that was issued by one of the banks that immediately after they received the bond, 4 or 5 months, they went under.
Oh, the bank went under, okay.
Yes, so that affected. Okay. However, I need to mention that before then, there were other bonds, corporate bonds, like Safaricom had issued a corporate bond, Mambati Rolling Mills had issued, and all those bonds came Consolidated Bank, and those corporates were able to honor their obligations, and the investors were able to get their money back, and the interest rates as well, including HFCK also had a bond, a corporate bond. All right. The easy thing of a corporate bond is that instead, you invest through the CDS. The CDS, the normal CDS account that you invest in shares. Okay. However, in bonds, you have to open a CDS account with central bank. Which is actually another question that I'll be heading there. But before we go on how to invest on that, you have differentiated. You have told us we have the government bonds and the corporate bonds. Correct. I have also come to learn that even in the government bonds, there are different types of bonds in there. Is it? Would you care to just elaborate just a little bit, then we move on? There are two types of bonds. There are FXD bonds. Yeah. Those ones have tax component in it. Okay. In them. In that the bonds that are 2 to 10 years, the government will charge on your interest income withholding tax of 15%. Okay. That, in simple terms, means if you had invested 1 million shillings of worth of a bond, and the return was 12%. So the annual amount of interest that you're expecting to get is 120,000.
Okay.
Divide twice, because you'll be paid every 6 months.
60
means
60.
60.
Yes.
This 60, you subject 15%
of tax now.
year of tax.
Okay.
Then now you will receive 60,000 less tax.
Okay. I think that's very clear.
Yes. Then the ones that are 10 years up to 30 years are subject to 10% tax. Why? Because the government encourages you to invest longer for your own security, social security, probably your old age.
Yes.
And so therefore the government wants to
entice you. Okay.
Now, there are other bonds we call infrastructure bonds. Infrastructure bonds are tax-free.
Wow. That's like a go-to.
Yes. And they are and that is why it's good to bring such a program so that Kenyans can learn.
Yeah.
I see the Asian community in Kenya today, every day. I buy bonds on their behalf.
Wow.
And I actually feel that there is a gap that is missing.
Yeah.
Because I want to see Kamau Otieno also
Everybody
investing
has buying, yes.
in Kimutai, investing in also these infrastructure bond. Because realize the infrastructure bond comes at 12%, 12.5%.
That's a good interest rate.
And this is a rate that is tax-free.
Clean money.
Clean money. So instead of, first of all, buying a plot in Kamulu, Mala, it is also good. Yes, you buy your plot in Kamulu, Mala, but also put some money in government bonds, so that you also have. And I put it this way.
Yeah.
I do not. When you look at the average return on rental income, is between 7.5% to 12%.
Wow.
It's the same return, probably higher, that we are giving. Government is giving. Hassle-free.
That's a beautiful opportunity.
Remember, probably rental income, you have a tenant who will not have paid, or will have.
They have moved out.
They have moved out.
There's a month of repairs.
Repairs and what have you. This is money government is giving you back, hassle-free.
You continue. Just give the money, and you're just going to enjoy the interest and receive your money back, as clean as it is. Profit, no tax.
Yes. You know, and let me say something. Government issues bonds every month.
Every month.
Every month. So if you have a CDS account that is active, and you are able to spare 100,000, 200,000, you can be buying a bond every month. What does that mean? That after 12 months of consistently buying a bond worth 100,000, 200,000, there will be money that will be coming into your account.
Almost every month.
Of every month.
Of your interest.
Yes.
My goodness. Now just post there, because I know there's a whole discussion as well of the number of times that these bonds are issued, which you've said is a month. Because you have just mentioned about the infrastructure bond. For me, that's like a very nice, what do I call it, a low-hanging fruit that everybody needs to tap into.
Correct.
And as you've said, most Kenyans don't know this, and they need to know this because it's a way some people are making a lot of wealth by themselves through these particular bonds, and we want everybody to know this thing. There was a key bond that was issued, and they had a very nice tagline, which I personally was the first time I invested in, the Kiba. And the word was, it was an infrastructure bond and all. And the reason why I would want you to just shed some light on that is because, I decided, you know what, let me try. And when I did, I got my interest twice in the year. And by the second time after the interest, they sent me as well the principal, full amount, and I enjoyed my interest. Would you want to shed some light about the Kiba?
Kiba was a product that was brought by government and CDSC and Nairobi Securities Exchange. That was meant to give Kenyans a chance to invest in bonds without necessarily, because majority of Kenyans do not have a CDS account at central bank, not a central bank, not the normal CDS that you buy shares with. Now the Kiba came in where government was borrowing, but through the normal CDS account that is held by CDSC. And it was fully mobile based. 3 years, 10%. and that bond was tradable on your phone. You will just place an offer,
send your money via M-Pesa,
yes,
and you're done.
And you're done. So upon maturity, government has not issued another M-Akiba.
Okay.
And probably as market players, it's about time that we urge the government to consider again investing in the M-Akiba again to reopen. We have another issue of M-Akiba because the minimum amount of money that an investor was required to put was 3,000. Maximum your M-Pesa limit.
Yeah.
And you would buy today, tomorrow,
and keep buying and
keep buying.
Yeah.
And the annual return was 10%.
Yeah.
Yes. And that was money that was tax-free.
Yeah.
Upon interest payment, they would send the money to your M-Pesa account or your bank account.
Absolutely.
Yeah, because if you had invested 3 million, then your interest payment was above the M-Pesa limit. So what they needed, they were sending money straight to
your account,
to your bank account.
And I think this is an encouragement to anyone who is new into this.
Yes.
That these things work, and I would say that with confidence because it has worked on my end now. It's good to speak on that end.
Yes.
And where can you get such interests? Even if, people keep their money in fixed accounts and banks and all, but you really can't get such interests that are tax-free, just like that. Which now draws me to the other question. Bonds seem to be like a little low-key. It's like for a few people who understand these issues. In fact, I would want to ask you the basic question. Are these just for a few, or is it open to everybody?
Bonds are open to everyone.
Yeah.
It is only that in the investor education has not reached the vast majority of people.
Yeah.
And I had mentioned earlier, I usually feel there is a gap.
Yes.
Because I trade for Kenyans, but I trade for a certain small number of Kenyans.
Yes.
And every time I trade, I feel there's someone somewhere should be able to benefit.
People should know this.
People should know this. And that is why we are doing this show, so that we ensure that you know this.
Absolutely.
You have a salary somewhere. You are able to give 100,000 per month.
Yeah.
Why don't you start investing in bonds? And government has a central bank. I know there is a central bank in Kisumu, Eldoret there is one. The other day, Kisii is being opened.
Yeah.
Nyeri there is one. Meru. Of course, central bank in Nairobi and Mombasa. You just need to walk into central bank, open your own CDS account, map it to your bank, that's your bank of choice.
Yes.
So that because when you are buying a bond, you will need the bank to settle, send the money to central bank once the primary auction is done.
Is given. Okay.
Yes. Then now from there, you subsequently start investing in bonds.
Yeah.
I would advise you need to have a portfolio where every month there's some interest coming in to your account. And this money comes straight into a bank account. Nobody with no interference whatsoever.
It just comes, does it?
And it comes on a Monday. Let me add. All interest payments and all maturities will come in on Monday. So you'll have a bad weekend, you are broke. Then all of a sudden, Monday around midday, you get a message that a certain amount has come in.
Okay.
And it sorts your problems.
So Alex, you've mentioned something, and I speak for myself and maybe probably many others.
Yeah.
Central bank,
here
in Nairobi especially.
Yeah.
When first of all you see the number of GSU guys around it.
Yes.
It looks like it's just, just a few people who pop in there.
Yeah.
And how you've said actually, because now, of course, we have the branches of central bank across the country. You're saying you need to walk in there and open that account.
Yes.
And so this is actually not as what we perceive as a difficult place to even try and go in.
No.
I would want you to demystify a little on just how to start that journey.
Yeah.
Where you need to walk in and what it entails to go in there, so that, and what you are needed to go with, so that at least you can open this account.
Now, what you'll need, number one, is your ID, your PIN certificate.
Yes.
Then there is a form you fill at central bank.
Yeah. So they will give you there? That form?
Yes, they'll give you there.
Okay.
Then you'll pick that form. Your bank has to certify that the account details you have given are the correct account details.
Okay.
So you take the form to your bank, it certifies, then you take the form back
to the
with your photo.
Okay.
Do not attach the photo on the form.
Yeah.
You attach it as central bank C, so that you sign at the back.
Okay.
That somebody can affirm that this is minor.
Yeah. The
passport photo that I've seen is minors, and therefore now I can affix. And at that point, that's when you sign.
Okay.
You give the form back. After 2 weeks, they will send you your account number, CDS account number. Okay. Once you get the CDS account number, you have a form that you feel that you can download on the central bank website. Okay. That you choose the stockbrokers of choice.
Okay.
The reason why you need to fill stockbrokers of choice is because sometimes you get need for money.
Yes. And we want to get some.
And you need to get some money out of your portfolio or your investment.
Yes.
So what you'll need is just to tell your stockbroker of choice that I have an infrastructure bond, IFB1 2016-15, worth say 500,000, 1 million, but my immediate need is 500,000 of the 1 million. So you will sell part of it.
Okay.
Or if you need the whole 1 million, then you'll tell the stockbroker, I want to sell the whole of it.
Okay.
So you will fill forms, send to central bank. Within a day, they avail the bond. I look for a buyer. I tell you, we have an offer to buy your bond at this price.
Okay.
You look at the buying price that you bought at and the price that you are offered. You see if you are making a profit.
Yeah.
If you are making a profit,
you sell.
You sell.
Okay.
Yes.
I think that's very clear, Alex. And I think what you've done is to really break it down that this is as simple as ABC from what I see.
Yes.
Walk in there, just have your ID, which is the usual, your PIN certificate, and a photo, and the form is there, you fill it up, then confirmations with the bank accounts, and you're good to go. Correct. I think it's a worthwhile course if you're watching, and that's the reason why today, as I said, was a class at MoneyWise. So please share this particular information with as many as you can as we go ahead, and remember to send in your comments as well and questions as we proceed on with the conversation. Now, Alex, before we hit the benefits of investing in bonds, there is some terminologies you've mentioned, and I would want you to help us out. I just had you mention some IFB1 2016-15, all that kind of thing. And so my question is this: what should you look out for when you're buying bonds? Now, in line with those particular numbers that you mentioned, so that the viewers here can understand what did he just say?
The first three bonds are abbreviated. For example, we just mentioned IFB1. 2016-15. What that means is it's the first issuance of IFB1 that was issued in the year 2016. That is 15 years. Then you'll find another. So in 2016, probably in May, that's when government issued that IFB infrastructure bond. Then you'll find that there is another IFB2 2016-15. It means it was the second issuance of a 15-year paper in the year 2016.
Okay.
So when you look at probably your business daily at the back of the page, when you look at the stock prices, the reason I've said business daily is because there is no other paper that puts bond prices in Kenya. It is only business daily.
Okay.
You will see FXD1 2016-10.
Okay.
Then it means it's an FXD bond. That one is taxed.
Yes.
That was issued in 2016, that is 10 year. So when you see FXD2 2018-10,
that's a 10
it means it is the second issuance of a 10 year that was issued in 2018. If you see SDB1 2011-30, that is a savings development bond. That
so
was
the
issued,
SDB Savings Development Bond. Okay.
Yes, that was issued in 2011. That is 30 years.
Okay.
So the last digit on any bond tells you how long the bond is. You will see an FXD1 2025. It is the first issue of 5-year bond in the year 2020. FXD1 2020, 2 years. It is the first issue of a 2-year bond that was issued in the year 2020. So it means that in 2022 that bond will have matured.
Wow. So Alex, what you're saying,
that
there are some people who invested in these bonds, and for about 20 or 30 years they will keep just enjoying the interest as they come.
Yes.
And yet the money has not been
Yes.
This is worth the talk. And you know what, before we jump into the benefits, there are some of course questions that are popping in, and I wanted to just look at a few. John Anjichi on YouTube is asking, is saying, good morning, and thanks a lot, John. What about secondary treasury bonds? What about secondary treasury bond market? Quick straight comment on that. I don't know whether you get the question.
I get the question.
Yes.
What he means is secondary trading. We have the primary auction. That is what primarily we have dealt with.
Yes.
And the primary auction is when the government issues that bond.
Yeah.
The moment government issues that bond, you can sell it tomorrow.
Okay.
And that is what we call secondary market trading.
Okay.
You do that having first of all had a CDS account, you participated in the primary auction, and now you have already selected the stockbrokers of choice.
Okay.
You tell us that you have this bond, I want to sell or I want to buy, and quickly you avail your bond, we sell, and you get your money the same day. Bonds settlement is same day.
Wow.
I sell the bond today, I can assure you by 12 midday you'll have your money.
You have your money.
Yes. So that is basically secondary trading.
Okay.
And you can also buy bonds in secondary trading.
Okay.
Yes.
Wow, that's a good one. That's a good one. Let me just pick another question as well. Jenny, and I think this question is also tied into something I wanted to ask. What is the minimum amount to invest on bonds?
100,000 shillings.
100,000 shillings.
Yes.
What about the Makiba ones, the 3K?
Yes, that was a different product.
Okay.
That was 3K.
Yes.
For government is 100,000.
It's 100,000.
Then from there, multiples of 50,000.
Okay. Okay. So you invest 100,000?
If you want to add,
yes,
you cannot invest 125,000.
Okay.
You invest 150,000.
So if I want to add another 50,
yes.
I want to add another 50.
Yes.
Okay.
Yeah.
That's a good
so
one.
you can hold, for example, 550,000, 650,000.
Yes.
1,050,000. It is multiples of 50.
Now this is an interesting one. We have tackled it before, but Elizabeth Wandolo on Facebook is asking, how can people in diaspora open the CDS account that you're talking about?
Diaspora clients can open through, because now there is an element of physically coming to central bank, so that gives a problem.
There's a bit of a
yeah. So there is another way that you can invest in bonds through a custody account. Your primary bank, for example, Stanbic, NIC, NCBA, KCB, they have custody accounts. So they can allow you to hold a custody account at a fee. So they give you a custody account at a fee. They map that account to your, then that eliminates the aspect of you going to central bank to open your. So you'll deal all your dealing within. So the instructions to buy and sell, you'll do through the bank.
Okay.
Yes.
So which now ties into another question I had.
Yes.
Would you advise a person who's watching, or even me personally, to buy bonds and T-bills through the bank or directly from the central bank?
If you can't be able to go to central bank, go to central bank.
Okay.
Because you will get a better price.
Okay.
Yeah.
Because through the bank, of course, there are always those few small-time levies.
And you see, you'll have some small levies here and there.
Okay.
So it eats into your return.
Okay.
But if you had you gone directly to central bank yourself, then it saves you those fees and what have you. So your return is higher.
Okay.
Yeah.
So Mwesinga Samson on Facebook is asking, which kind of bonds are for every month? Do you have some examples you could give him?
What usually happens?
Yes.
Government looks at its maturities. It knows that we have this money, that we need money, X amount of money, and we are paying out this amount of money.
Yeah.
So this month they could issue, for example, the month of October, they issued FXD1 2018-25 and FXD1 2011-20.
Okay.
The FXD1 2011-20 is a 11-year bond.
Okay.
The FXD1 2018-25 is now a 23-year bond because it was issued in 2018. And there's a 25-year bond. Okay. So 2 years have lapsed. Okay. So now we call it a 23-year bond.
23-year, okay.
Then now, next month, November, they could issue a 5-year bond and a 15-year bond.
Okay.
Then December, they could issue a 2-year bond and a 10-year bond. January, they can do 10, 15. So that is how every month it's a different, you get a chance to invest in different tenors. Yeah. And that is why it is important to keep checking their website and what they are issuing, which bond they are issuing. So that depending on your portfolio, how you want to build your portfolio, then you will see, can I skip this month? Because if, for example, they issue a 15-year bond and last month they had issued a 15-year bond,
so maybe you can
then
skip that
you
one.
can skip that one, hoping that next month they will issue a 10-year that now you can invest then like that.
All right, let me ask this question. How do people make money from trading in bonds?
Interesting question.
Please answer that question.
Yes.
And I think that ties in with the benefits of investing in bonds. Maybe you could elaborate on that and then we'll get back to the questions.
Now, bonds have good returns, especially when you're trading. Yeah. I'll give an example of the year 2016, when we were just, when the issue of interest cap came in and what have you. Yes. That time the interest rates moved up and we had 10-year bonds and 5-year bonds being issued at 16.5, 17%. Right now those bonds are trading at 10.5%. Yeah. When you sell a bond in the secondary market, you had bought at a higher yield, say 16%, and you sell at 14%, you make something we call a capital gain. Okay. And when you do the mathematics, you will see that it's a good return. Okay, because you had bought at a higher tax rate then, and now it's it's a lower. Yes. Similarly, if you buy today at a bond that is 10 years, and you buy it at 12.5%, and the interest rate regime changes, and you find yourself, you have to sell at 14%, you will make a loss. Okay. Yes. Okay. And once you do the tabulations, you will see. Okay. The reason is as simple as this. You bought at 12.5%. So you agreed with the government that
this is the interest
I'm
rate.
giving you my money. Yes. You'll pay me at an interest of 12.5% for 10 years. Yes. Then you sell the bond to come out on the other side at 14% per annum. Realize that your agreement with government was 12.5%. Yes. But you have agreed to sell to person B at 14. Yes. This gap of 12.5 to 14, that is 150 basis points or 1.5%. Yes. You have to, it will eat into your income now. Income. Absolutely. And that is why you'll find that you bought your bond, probably a price for 100 will be 93 shillings. Okay. Then now when you're selling, you'll sell at 91. But I'll be right to say these are rare things, because even the move to the 14% was really an unprecedented move. Yes. It was sort of like a calamity. And at that point, I will tell you that you're making a loss. Yes. So depending on your immediate cash flow needs, you'll make a decision. Can I take the hit? Yeah. Can I borrow elsewhere? Most likely it will be better to hold. Yes. And can I hold and wait for the time when the interest rates will? Yeah. Similarly, today you buy at 12.5%. Tomorrow interest rates dip. Yes. You find yourself selling at 10%. At that point, I'll tell you, sell. Run. Make the money. Make some money, because you'll find you bought at 93 shillings per 100. Yes. And now the bond has moved to 98 shillings per 100. Yeah. So meaning, you bought for every 1 million, you bought at 930,000. Yeah. And now you hold it for 2-3 days, and the interest rate moves lower. Yeah. You are at 98, you are selling at 985,000. You have made your money.
Good money.
And you look for the next opportunity to invest.
All right. I think you've tied in that very well. And how people make money, of course, through that.
Yeah.
Somebody else was asking, how do you decide between investing in bonds or T-bills? Would you like to quickly say that? I know you had mentioned
T-bills. Yeah. T-bills are short term.
They're short term.
We have 3 T-bills.
Yes.
91 days, 182 days, and 364 days.
Yes.
There is no T-bill that is longer than 1 year.
Okay.
So, if, for example, you are talking, if you had a CDS account, you have money now, and you are thinking that Magoha may reopen the schools in February.
Yes.
Or January, and you think you may eat your money, quickly put them on T-bills.
Okay.
91 days T-bills.
Yes.
The money has moved away from you.
Are these ones taxed by the?
Yes.
Okay.
10%.
Okay.
So the moment you invest in that T-bill, then we're in October. 3 months from today, Monday, because you'll pay on Monday. 3 months from today, you get your money back.
Okay.
So they are for short-term investment needs.
Okay.
So you want to buy your car in April, for example.
Yes.
And now you have 500,000, and probably you want to buy a car that is worth another 500,000.
Okay.
So you think that you may eat this money.
Yeah.
So you put in a 6 months T-bill.
Okay.
As you save more, so that you buy your car in 6 months.
Can I ask a basic question? That T-bills are guarantee as well that at least you will get your interest?
Yes.
On the money. Okay.
And how T-bills work? They work differently from bonds. So right now we are talking of around 8% per annum.
Yeah.
So they calculate how much interest you'll earn. Then when you are paying, for every 100,000,
yes,
you pay less the interest.
Ah, I get you.
So if they see that you are supposed to get an interest payment for 100,000, you are supposed to get an interest payment of 8,000.
Yeah.
You will pay 92,000.
92,000 is what you pay.
Yes. Then after your 6 months,
you'll get your 100.
You get your 100,000.
With now the profits that are made.
Yes.
Okay.
Yeah.
I think that's very clear.
Yeah.
And I think easy to understand as well. So these are more short term.
Yeah.
If we may use that word, right?
Yes.
Let's get back to the questions. And I have another one from Mamushka. Very helpful conversation. What's the process of opening a CDS account? I think that one you have addressed.
Yeah.
And then expound more on the infrastructure bonds. Would you want to say something on that?
Infrastructure bonds are issued by government.
Okay.
For specific infrastructure projects.
Yeah.
For example, they'll say that we are borrowing 60 billion. We'll put 13 billion to energy, 40 billion to roads, and probably 8 billion to water.
Okay.
So the total issuance that we are borrowing is 60 billion. So that, they tell you that we are investing in 10 years or 15 years. Then they will also tell you that most government bonds are paid, mature in tranches.
Okay.
Where they will tell you, we are giving you a 16-year bond, but it will mature in 3 tranches.
Okay.
After 8 years, we will pay you half of your principal. After 4 years, after paying the half, we will pay you 25% of the principal.
Okay.
And the balance of the 25% will be paid upon maturity.
Okay.
But the good thing of all this infrastructure bond is that they are tax-free.
Okay.
Yes, and that is why they are popular with foreigners. And let me say this, with foreigners and the Kenyan Asian community.
Yeah.
I find rarely I find Kamau Wafula investing in these bonds.
Yeah.
Yes.
So you better be watching out for the infrastructure bonds.
Yes, you better be watching out for the next infrastructure bond so that you participate.
Wow.
And you get that benefit of getting a return that is tax-free.
Okay, that's a good one. Let's get to some other comments here. Valentine Washira on Facebook. Good morning too. Good people, thanks for bringing this show. I always get empowered listening to your show and especially listening to Alex. May God bless you. Thank you so much. I think that's a shout out from Valentine. So her question today is, what is the minimum amount you invest in? And I think you've mentioned
100,000.
That's 100,000.
Yeah.
And then you can top up with 50,000 as you go. Is
it?
And then how do you open a CDS account? I think you've also expanded on that.
Correct.
Walking to central bank. Hey, I was also taking notes.
Yes.
Walking to central bank, or if you don't have, if you're away Diaspora, maybe go through your bank.
Yes.
Give instructions. Elizabeth Wandolo, the banks are charging exorbitant amounts to open the account for me. So I wanted to open an account on my own. What do you have to tell Elizabeth?
What Elizabeth can do, she may take my email address.
Okay.
So that I can try probably help her with the central bank.
Would you want to say it out now, so at least?
Alex.washira at fib.co.ke.
Alex.washira at fib.co.ke. I'm sure we'll be running that.
Yes, copy my colleague James.mboro at fib.co.ke.
Okay.
So that when the emails come, I have somebody who can be able to, the ones that I have not seen, that can be able to be answered back.
So I'll ask you, Alex, to probably say that again so that my team can take that down.
Yes, Alex.
Did I say my team? The production team can take it down.
Yes. So Alex.washira at fib.co.ke.
Yeah.
And James.mboro at fib.co.ke.
All right, there you have it.
Yeah.
So Elizabeth, make sure you send an email to either of those emails, and you'll be getting some good help. Mushko, again, you asked a question, what's the minimum amount required? I think we have addressed that. That's 100K, then you can top up. Mtani, Mtachana too. How much can someone start with? I think that has been mentioned as well.
Yeah.
James Karanja, what is the least amount one can invest? We have said that. And I think it's good to tell the viewers that they also need to watch out for, there are these bonds with a minimum of 100,000.
Yes.
But there are those particular infrastructure bonds given through the Emakiba.
Yes.
The ones for 3,000 and above.
Yes.
So you may not have the 100K, but just keep watching out, because there could be another issuance. That comes along, which is hopeful for those of us who may not get the 100K.
Yes.
Michelle Pratt, where do we get these stockbrokers that we are to write down when opening a CDS account? That's a good question, because I think you're already speaking to one. Do you want to say
speaking to one? Faida Investment Bank, we are stockbrokers.
Yes.
You can look also at the NSE website.
Yeah.
You'll be able to see the other stockbrokers.
Absolutely.
We are about 25 of us in the market.
Yeah.
So you are spoiled for choice.
Yeah.
Yes.
Okay, so just visit the website and see the certified ones.
Yeah.
Michelle, but of course, not to be really on a bias, Alex is right here, and he's just given his email, so you can talk with them.
Yeah.
Patience on Facebook is saying, Patience Madibet, thanks for watching. How do you get profit from selling your bonds, yet the rate is fixed? Do you want to explain that? I think you had said something, but could you explain that?
How you get profit?
Yeah.
When you're buying the bonds, you'll get to buy, for example, a 10-year bond at 12.5%.
Yes.
The interest regime changes, and the secondary market moves the yield lower. One of the reasons the yield moves lower is because with time, bonds have a certain yield. We call it the NSE curve of bonds.
Okay. Because
you'll find a 2-year T-bills at around 8%. That is up to 1 year.
Yeah.
Then 2-year papers will trade at around 9%. 3-4-year papers will trade at 10%.
Okay.
5 to 10-year papers will trade around 11 to 11.8%. 10-year papers at 12%. 15 years at 12.5, moving to 13%. 25 years will trade above 13%.
Okay.
So
it's
as
more like the longer time.
It's a curve that moves like this.
Okay.
So as you hold your bonds, the curve now moves south. As the curve is moving south, it means your price per 100 changes.
Okay.
Your price per 100, probably you bought your bond at 91%, 91 shillings per 100.
Yes.
As the yield comes lower, it moves to 92, 93, 94.
Okay.
95. And that is when the point that you are able to sell and make a margin. You are making a margin of between 91 and 94 shillings. That's 3 shillings per a price of 100. So if you had invested, say, 100,000, you invested 91,000. After 2 or 3 months, the price is 93. So it will mean that when you sell the bond,
yeah,
you will sell it at 93,000.
Okay.
You make your capital gain of 2,000 shillings.
Okay.
Yes, that is how the...
All right.
Yes.
I hope that simplifies a little bit for you, Patience. Moshko again, might you already know if the government is about to issue another bond?
Yes, by next week you'll have, when you look at the CBK website,
yes,
you will get to know which bond they will be issuing in the month of November.
Are there particular dates for people to be checking on?
You need to check between the last week of the month,
yeah,
to the first week of the month.
Okay.
You'll get to know which bond is being issued. Yeah.
There was a follow-up on that. Is the interest taxed?
Yes.
Yeah.
2 to 10-year bonds,
okay,
15%.
15%.
10 and above, 10%.
Okay.
Infrastructure bond, 0%.
Okay.
Yeah.
There is a question on Facebook from Prince Dungo Kakis. Hello, can non-Kenyans invest in bonds in Kenya?
Yes.
Ah, okay. That's
Yes.
a good one.
Yes.
So
And that is why I said
yeah.
that it pains me that the infrastructure bonds
Yes.
are majorly held by banks,
Yes.
foreigners,
Yes.
and a few Kenyans, probably most of Kenyan of Asian descent.
Okay.
So,
So foreigners are open. They're the ones who are doing it.
And even the stock exchange,
Yeah.
minor.
Yes.
Our stock exchange, 70% of the trades
It's
are being done
invested.
by foreigners. We Kenyans, we have no interest in our exchange, and that is where money is being made.
My goodness. You better open your eyes now, is it?
Yeah.
Thanks for that question, Prince. Steve Asamba, what are the requirements for a company to open a CDS account? I think I want to touch with this because there was a question on what happens, institution buying of bonds, or treasury bills. So I think I would want to tie those two together. How can an institution with extra cash maybe buy bonds? Because I think it ties in with what Steve is asking, the requirements for a company to open a CDS account.
The process of a company opening a CDS account is similar to a company opening a bank account.
Okay, all right.
So you need the board resolution that we have decided we are opening a CDS account.
Yeah.
You attach that. You do, you write the mandate letter.
Okay.
The board has mandated XYZ
Okay.
to be the authorized signatories of our CDS account.
Yes.
We have nominated X bank to be our custodian, or the money to be sent to our bank at the X account.
Okay.
Then now your directors, the people you have mandated,
Okay.
will walk to central bank,
Yeah.
do the needful as an individual.
Excellent,
Yes.
excellent. Similar to just an opening a bank account.
Yes.
All right, thanks for that. Steve, Sally is asking, what are the advantages of a fixed bond over the infrastructure bond?
A fixed bond over the infrastructure bond usually has a slightly higher return than an infrastructure bond.
Okay.
Probably because of the interest factor,
Okay.
because it is taxed.
Okay.
The infrastructure bond is not taxed.
Yeah.
Then, if you want to hold your money for a certain period, and you do not want partial repayment, like what happens in infrastructure bond,
Yeah.
then now you do with the fixed bond. Because if you invest your 100,000 and the bond is for 5 years, you'll get your 500,000 in 5 years.
Okay.
Yeah.
All right. Michelle, you asked about the least one can invest. We have answered that. The 100K or 50K, or wait for the next issuance of Emakiba, which is way lower, as low as 3,000 shillings. On Facebook, I have M2. I think maybe the name wasn't full. Why is Central Bank recommending that if someone wants to open a CDS account, they suggest KCB? Why KCB? I think that's new. I don't know whether you've heard of that.
Not a fixed account.
Yes. If anyone wants to open a CDC account.
No, maybe a custody account.
Okay.
Because Central Bank is the one that has the CDS account. It cannot delegate to KCB.
Okay.
Yes, it has the account. It is the one that creates the accounts.
Okay.
Not unless they are talking of a custody account. Yeah, but in terms of the CDS account that you can buy bonds,
yes,
it is Central Bank that does that.
Okay.
Yeah.
All right. Freddie Omondi is saying, when it comes to bonds, what can cause the principal itself for the bond to be reduced? I don't know whether I'm trying to get a question. When it comes to bonds, what can cause the principal itself for the bond to be reduced? I don't know whether
it can only reduce if it is an infrastructure bond that has the partial repayment.
Okay. Okay.
So you get back your principal partially, 50%, 25%. Then some infrastructure bonds will partially redeem at 25%, 25% in 4 tranches.
Okay.
And that will be revealed to you at the beginning, at the point where you are buying the bond. At the primary auction, you will get to know these bonds will be paid partially, will mature partially, or you'll get it 100% principal at the maturity of the bond. Okay. So it is disclosed at the point of the primary auction.
Okay.
Yeah.
10, what options are there when you don't have the initial 100K to invest in bonds? I think we have tried to talk about that. There is an issuance of Emakiba. And I think it's about to come through.
Yes, we are hoping that any time, because the first one matured, and it was pretty successful. Okay. We believe that government will reopen, will issue another Emakiba bond. Okay. Yeah.
Madi Betazin is asking as well, can you buy bonds as an investment group?
Yes.
So similar to a company,
similar to a company.
If you have your structures, go to the bank.
Go to central bank.
Go to central bank, yes. And buy that. Huh?
Yes.
Brenda Shiko, very informative. Is T-bonds taxed and at what rate?
Treasury bond is taxed.
Yes.
Yes. We said 10%.
Yeah.
For 10 years and above, 15%, 10 years and below.
Okay. Elizabeth Wandolo, thank you for the lovely show. Asante sana. Mwai Laban, great insights, Mr. Alex. Learning a lot of investments. Cheers. Thanks a lot, Mwai. Godfrey Kaimeni, good morning. Do you have a branch in Mombasa?
No, we don't have a branch in Mombasa.
Okay.
But we have emails, we have websites. You can always be able to reach us.
So you can always transact, open accounts as well through that?
But if it means, is there a central bank in Mombasa? Yes, and you can open.
Yes,
and you can open your CDS account in Mombasa.
Okay.
Yeah.
Maybe Godfrey wants to go through the FIDA, so you can always write to them through the emails.
Yes.
Yeah, I hope we have the emails running. Great. Yeah, the emails are at the bottom end of your screen. So Farmer Wangari, she was on the show last week. We invested in shares with our chama. We are negative 134K. Do we pull out or hang in there? Okay, I think she's now broadened to the share part. I don't know whether you're prepared for that.
I can answer that.
Yes.
I don't know which shares they bought.
Yeah, she should have said which ones, yeah.
If it is, for example, Kenya Power, Kengen, Mumia Sugar, Everready, those ones they'll have to hold for a while.
Yeah.
Because probably the ability of them moving back to the prices they bought at could be will take a little bit longer.
Yeah.
Safaricom, KCB, Equity, those ones anytime they can spring back.
Yeah.
Yeah. So it depends on the portfolio which shares he's holding. Okay. And sometimes when you do that and you realize your portfolio is on the negative.
Yeah.
Depending on how much money you're holding, you are advised to buy more at the lower price.
Okay.
So that you push the average price lower, and therefore, if, for example, let me say you had bought, for example, Kenya Power shares at 3 shillings.
Yeah.
They are now at 1 shilling and 70 cents. You can push the yield, the buying price lower by buying more at 1 shilling 70 cents, such that by the time they move to 2 shillings and 50 cents, you are already in the money and you can sell.
Yeah.
You may not necessarily need to wait for the 3 shillings for you to break even.
And maybe Wangari, sometimes patience pays.
Yeah.
Because as they say, the curve will always go up somehow, so don't worry about the dips and all.
Yes.
And I think even that this season, the stock market is relatively on a flat curve.
Yeah.
So, and most likely hitting up because we're just from the corona season, isn't it?
Yes.
All right, Wangari, so keep hope alive. Declan, the channel has added so much value in financial matters. I think in your financial matters, that's hard to quantify. Thanks a lot, Declan. The best thing, keep sharing them as well. Let others as well get to learn from this. Oscar is asking, do you have a calculator that can show the return on a bond based on the time I think that's a percentage return. Is there a calculator? I think it's more like the compounding interest way that you can just decide to calculate and do all that.
I can probably share a calculator.
Okay.
Then on phone probably we can discuss. I show him how to, because I can share a calculator, I may not be able to use it.
Yeah.
So I have to tell you these are the areas that you change.
Yeah.
And then you play with it, then you'll see how you make money in bonds.
Okay.
Yeah.
All right, Oscar. You can also send an email directly to Alex, is it? So the final, I think we can take a final comment, then close up because time is running out.
Yeah.
So on YouTube, Jay Maru, oh, this is pretty amazing stuff. Okay, thanks a lot, Jay Maru. And I think all the questions I had as well, the people asked on my behalf. So maybe, Alex, before I release you, I would want you to, talk to someone who, this probably was the first time they're hearing about bonds, and they're hearing that even with as little as 3K, I'm actually able to get an issuance through Makiba and make some money. And some people maybe argue out and saying 10%, and also address, I know I'm saying so many things, address people who have some 20K or 50K in the bank just there, and why they need to think of putting that money in a different place. What would be your advice?
My advice is, when you sit with money in your account, you will definitely get away of using it.
Yeah.
You will definitely get away even when your relative or your friends ask you for money. You'll find a way of lending that money because it is reachable to you.
Yeah.
Even for example, on a Friday night out and you have 20,000 in the bank, you will fall easily to temptation and you'll spend it because anyway, now the party is good.
Yes.
And let us have another round of drinks. Your 20K is gone.
Yeah.
But had you taken time to either invest in, for example, if you have 20,000, you can be able to buy about not necessarily the bonds, but you can come and you buy Safaricom shares.
Yeah.
And you'll be able to get a dividend at the end of the year. You can buy equity KCB shares with 20,000-30,000.
Okay.
And you can be able to build that portfolio up to a point where you get your 100,000. Then we can sell, and now you invest in bonds.
Okay.
So we can take that route where you first build a portfolio of shares. And we usually advise it is important for you to have a portfolio that is balanced. Okay. Have a portfolio of shares and have a portfolio of fixed income bonds. Okay. Why? Because at in one particular point, you may find when you want to sell, either the bond, the price is not favorable, or the share, the price is not favorable. So you look at your portfolio and say, I think now, let us sell shares because the bond is not favorable. Yeah. You may find now, like the lady who just said that they are negative 143,000 and they need the money. Yes. We sell the bond, we hold on the shares. Yeah, that's true. So if you have diversify your portfolio.
Absolutely.
If you have less money, build on shares. Yeah. We get to 100,000, sell, we get into bonds.
Okay. Yeah. My goodness, what a session we have had, Alex, and thanks a lot for coming in. I think we may need you again because we didn't exhaust the questions.
No problem.
And for the hundreds of viewers as well who are checking us out, thank you so much for that. Yes. But before I end, I think I like sometimes picking out some stuff that I picked in. Number one is that bonds actually are safe instruments of investing. Correct. Very safe because your principal is secure. Yeah. So at least this is a place, and even for Wangari, who you just addressed, you know what, just balance, as you've said. Balance your portfolio. Correct. Don't just buy shares. Think about even the fixed income instruments, which are now the bonds that we're talking about today. I think the other thing is this, today, because it's still a weekday and a working day, you can open a Cbs account. Correct. By just walking into Central Bank.
And you invest in the next coming primary auction for the bond that is going to be issued in the month of November.
Yes. Yeah. And maybe I'm speaking for some others who are watching. I always pass by Central Bank from a distance. Yes. So you can walk in.
Yes, you can.
Okay, Alex. I can't end this without really thanking Rina, who's not here with us today, and for the investment she has put in very many people, as some of the comments were saying. And to let you know that there's a book by Rina, Moneywise, Create, Grow, and Preserve Wealth. I mean, an amazing book that you can always get, and at the bottom end of your screen, there is all the details on how to get the book. You can even walk into Textbook Center and get it and go ask for this particular book. I have read it personally, simplified language, relatable, and you get a lot of things that would really help you in this whole process of preserving and growing and creating your wealth as well. So many thanks, Rina, as well, from wherever you are watching us from as well. And Alex, once again, thanks a lot for being here.
Thank you, thank you.
All right.
Thank you for hosting me.
Yes.
And have a nice weekend.
Absolutely.
Open your CDS account.
Open the CDS account.
Yes, open the CDS account. We talk from there.
Yes.
Yes.
And I know you had a lot of fans who are watching,
yeah.
So I know you have sent your salams.
Yes, nimewasalimia wote. Mungu awabariki, muwe na weekend njema.
Great.
Again, tufungue account.
All right. Yes. All right. Thanks a lot.
Thank you very much.
Yes.
Yes.
Asante sana. So it's 9, and that's where the show comes to an end. But just to let you know that this conversation has not ended. So next Friday, same time on this particular channel, Money Wise. See you. Bye-bye.